Hello, my name is Eddie Tofpick. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited, and here is your weekly technical analysis of Paris milling wheat, Minneapolis wheat, and London, UK feed wheat. Paris milling wheat. Much as Chicago and Kansas City wheat, this market has been the story of three patterns, though not necessarily channels, and also not necessarily the same results. I'll explain. The first pattern and the largest was the late June to early September bear channel that morphed into a descending wedge pattern. Then it was the early September to mid-October rising expanding wedge pattern. And finally the most recent and shortest pattern was the mid-October to mid-November bear channel that together with the expanding wedge pattern made a V-top pattern. 3 weeks ago prices broke up higher outside the bear channel with some interesting results, rising initially as far as the combination of the short-medium moving average, currently at 231, and the recent March to May 50% Fibonacci line, which is also at 231, where the market was capped and gapped lower. However, the move back down did not exceed the earlier November low, though both were stopped by the same support, which is the 50% absolute Fibonacci line below at 219. This left behind potential targets below for the early September to mid-October rising expanding wedge pattern. A primary target X in the 217 zone, and a secondary harder to reach target X1 down in 208. On this I said 4 weeks ago, and I quote, I suspect the best supports for this market are from where we are now down to the 50% absolute Fibonacci line at 219, and it might well be easier to reach target X and target X1 should prices manage to drop below the 50% absolute Fibonacci line. We'll see if this comes about should prices venture that far down. End of quote. Last week I was beginning to wonder just how much bullish incentive there really was in this market, as prices were having issues with the then overhead short medium moving average and the 50% combination, 50% Fibonacci combination. Plus further overhead there are some significant resistances, specifically the neckline extension to the June to November 2023 head and shoulders top, which is currently at 238. And the 238 to 247 congestion area containing the March 2013 high at 240, the February 2013 high at 247, plus the newer October-based congestion between nearby 237 to 245 that was caused by the previously mentioned congestion band. Well, the resistances at 237 and higher are still there. I needn't have worried about the short-medium moving average and the 50% combination, Fibonacci combination, as changeover gapped prices higher, and what is more, has left us with two potential bullish patterns below and the likely destruction of targets X and target X2 below. Also another pattern which I spoke about last week. Now the two bullish patterns are the obvious late November to early December island pattern, plus a possible November to date double bottom pattern. This sort of ties in with another pattern I'd highlighted back in November. A bow tie formation of the moving averages made 3 weeks ago, from the short moving average currently at 227, the medium moving average currently 227 also, and the long moving average currently 230. The moving averages went in and out of the bow tie in the rightful order, but whilst the way in looked a clean move lower, the way out has been messy and, as I said last week, and I quote, even starting to look higher, end of quote. I further stand by what I said last week, and I quote, I'm reserving my judgment on this part, but I suggest that approximately 15 to 20 sessions after the crossover, look to see some volatility in prices and maybe direction. So watch out between the 16th to the 20th of December to be sure. Well, even before the 16th, though admittedly due to changeover, we have seen prices follow that, and I quote, even starting to look higher, end of quote, that point. Nevertheless, look to see what next week may bring. Then there is the recent double bottom pattern. The latest gap higher sets up a primary potential topside target X2 in the 241 area, with a secondary harder to reach topside target X3 up in the 245 area. We also have the island pattern below, which gives us a potential primary target X4 up and nearby at 236.5 and a secondary target X5 up at 238. Also interesting and nearby. Now the one pattern that has suffered is, I suspect most of all, has been the pattern I drew last week, a late May to mid-October bearish shift pitch hook. I thought last week that the no broken upper time, the currently at 230, might provide another level of resistance overhead. Well, it didn't, as the market hurdled over it with the gapping action. I will likely retire this pitchfork by next week. Minneapolis wheat. The market here had been a little different when compared to Chicago, Kansas City, and even Paris wheat. You see, for many months now, the core recent pattern is a very large one, a sideways expanding wedge pattern highlighted in dark blue on my daily chart. It's currently 547 to 702. It's not a very good pattern, but it's there. This pattern is still alive though, not without incident. And there's also a much larger pattern as well, one I've been discussing in my commentaries here for months, a descending expanding wedge pattern, currently 635 to down well off the bottom of my daily chart. Again, not a very pretty one. The upper trend line has been escorted and reinforced since at least late last year, though not very well, I have to say, by the declining long moving average, currently at 644. I've kept this breached large original descending wedge pattern still on my daily chart, as the others that were here originating from August, September and October 2023 through to April 2024 have all been thoroughly broken, and this, which is the largest one, is still here even if it was previously breached as a just in case situation. Going back to the market action, prices turned higher from a small V bottom in late August, prompted by the breached purple highlighted September 2019 to date uptrend, currently at 600, into an early September to mid-October scrappy looking ascending expanding wedge pattern. Unsurprisingly, this peaked in mid-October and was capped by the combined upper trend line of the expanding wedge pattern. That was also the neckline to the inverted February to June head and shoulders continuation pattern, thus turning lower and creating a bright red October to early December bear channel, currently 539 to 583. This turn lower did not quite have the integrity here for a V-top as seen in other wheat markets, but the bear channel, despite some other grain markets heading higher, maintained its integrity until late last week. Prior to this, for the last 4 weeks, prices moved below the breached purple September 2019 to date uptrend, but have not stabilized below it. This has left the secondary hard to reach target X1 for the September to October based small ascending expanding wedge pattern down at 563 at the low of August, sort of hanging out there a little. I'm not as yet minded to retire this target, not just yet. What is more, this week prices have instead stabilized above and outside the bright red channel. It was, as I said 3 weeks ago, and I quote, "We're seeing the market getting squeezed like a toothpaste tube in between the overhead bright red bear channel line and the purple neckline. Now something is going to have to give way, and it will be soon." End of quote. Well, the bright red upper bear channel line gave way, but that was not all, as last week I drew a late May to mid-October bearish Andrews pitchfork. The upper time, currently at 583, was and is hugging close to the bright red upper bear channel line. So this has also been breached, if not broken now. And I will most likely finesse this bearish Andrews pitchfork to a shallower bearish shift pitchfork for the same move. It'll also be the end of the bright red bear channel. Now looking overhead now, and we have some seemingly recent effective resistance from the October 2018 high at 611. Beyond this, we have the medium moving average, currently 618, and the short medium moving average, currently 623. With just beyond that the combination, the April 2024 low at 635, and that previously mentioned upper trend line of the expanding wedge pattern, currently also 635. Though I have some questions about the effectiveness of that last one. London UK feed wheat. There continues to be now only one major significant pattern on this daily chart, and that is the bright red late May to early July bearish shift pitchfork. The market is right now in between the overhead upper time, currently at 186.5, and the middle time below, currently 168.70. Despite other mainly bearish patterns, this bright red one has been gently maneuvering prices lower since early July. Additional to this, we have overhead on occasion, all the moving averages, with the long moving average currently at 181.10, just above the overhead 50% absolute Fibonacci line at 180.5. We also have the September 2021 low overhead at 181.70, plus the flatlining short medium moving average, currently 181.95, and the slowly declining and significant medium moving average, currently 183.45, a little further up. Below the market, well, we have the recent March to May 50% Fibonacci line at 178.25, but there's not much till the November and late August lows at 174 even and 174.65 respectively. This leaves what I said 3 weeks ago still in the frame, and I quote, "So looking at the early October actions, what may turn out to be the key feature was the island top over early to middle of October for potential target X below in the 169.90 zone. This island top led to the October to mid-November bear channel, which we exited out of to the top of, though not necessarily that convincingly. I voiced some doubts about the bear channel the last few weeks, but I also said I would go with it until something better comes along. I'm now looking for that better move or pattern to appear." End of quote. I am still, even now, still looking for that better pattern to appear, but until then I'll just utilize the bright red bearish pitchfork until this new pattern makes itself known. Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Service International Limited. And here comes the final important bit.